Welcome to Real Estate IQ Wisdom for Smart Moves. We will explore the insider secrets tailored exclusively for Silicon Valley home buyers, sellers, and investors, arming you to conquer the unique real estate landscape. So, without further ado, let's dive into this exciting conversation. Today, we welcome Ami Shah, the founder of Ami Shah CPA. She aims to revolutionize tax planning by integrating innovative strategies and philanthropy, empowering clients to achieve financial prosperity. Thank you to our sponsor, TradeMyHome.com, for their community commitment and for making this podcast possible. Silicon Valley's real estate market faces tax challenges amid soaring property values. Santa Clara County's assessed value spiked by $43 billion last year, fueled by demand for luxury homes and new construction, especially in San Jose. Driven by tech industry workers, property values across the county's 15 cities has significantly increased, often leading to sales well above asking prices. The median home price has exceeded $1.7 million, up 17% from the previous year. Challenging real estate tax planning has even condos and townhomes in San Jose now surpass $1 million. Our host today, Shared Gupta, is a real estate broker in Silicon Valley and brings a wealth of life and professional experience to his role as a podcast host. The following content is only for informational purposes. Please consult a licensed consultant for your specific situation or if you need any specific legal or tax advice.
Ami, welcome to the show.
Thank you, Shara. Thank you so much for inviting me to this show.
Give us a brief background about yourself. Who do you serve and how did it all begin?
So I come from a Jain business family and came to U.S. on a dependent visa. As soon as I came here, I'm a chartered accountant by profession. I studied chartered accountancy. And as soon as I finished, I got married and came here. Soon to realize that nobody sponsors any visa and I need visa. I needed visa to work. So one of the firms was happy to sponsor my visa, and then I started working for a CPA firm. And then, as always, usually coming from the business family, I wanted to start my own business with the passion to give the best solution in terms of taxes and accounting. I started my own business, and today, after 17 successful tax season completed, we're thriving and growing, and it's a very exciting time. We have a team in India as well. We're about 10 people firm. We provide tax and accounting solutions to all the business owners and high net worth individual. I would say where we can bring the best value is for the taxpayers who pay highest amount of taxes. We are here in California, 37% federal and 13.3 California, actually 14.3 if you're about $1 million. Then, your biggest expense is 50% is your taxes. And we might think that, okay, I'm making more, so that's why. But if you compound that with the year after year 6% or 10% maybe nowadays, it comes out to be really, really a huge number.
Right.
So I would say that whoever wants to save on taxes, we're here for them. And that's who we serve. Now, how all it started, I was working, as I said, I was working for a small CPA firm and doing quite a bit of good amount of work. And one of the mentors started his own, and I kind of joined the bandwagon and then started working for him, and then eventually started on my own. And it has been a good run so far. No complaints.
What are your top tax planning strategies for real estate investors today?
Shad, to be telling you honestly, there are many.
Right.
But for now, the top ones are we're really taking advantage of the investment tax credit, which is called solar credit for the energy efficient improvements, and accelerated depreciation. So last year for 2022, the bonus depreciation was 100%. This year, the bonus depreciation is 80%. So, and combining that with the tax credits of 30%, you can write off almost the entire asset that you acquire. And then with taking the advantage of the cost segregation study, we can write off quite a bit of real estate investment acquired in the same year. So that gives a really, really good amount of return on investment right away. So one of the top tax planning strategy is combining the tax credit, bonus depreciation, and cost segregation study.
What is the difference between bonus depreciation and cost segregation?
So the difference between the depreciation and cost segregation study is the cost segregation study is used to claim the depreciation. So cost segregation study will break the building apart in 5 years, 7 years, 15 years, and 39 years. So you need the cost segregation study to claim the accelerated or the so-called bonus depreciation.
What is the best entity structure for real estate transactions?
I would say LLC. LLC is the best way of holding any real estate because it gives you the flexibility that you can take the property in, out of the LLC with the built-in gain issues. No, there is no depreciation recapture. You can slice it, dice it, strategize it, sequence it the way you want it. The LLC gives the total flexibility. If you are the only individual owner and the property value is very minimal, let's say $100,000, $200,000, then I would not venture into forming an LLC. You can just own it individually. But if there are multiple people involved, if the property has a high value, then you want to definitely incorporate it into an LLC. And one more thing on the individual ownership, right? It's simple structure. There is no compliance requirements. It saves you a lot of money in terms of compliance cost. So that's why I would say that, if the property is low amount and then, there is only one individual, one family involved, then I can just hold it in an individual name and no need to form any other LLCs or any other entity structure.
Worried about the dilemma of selling first or buying first? TradeMyHome.com, powered by Your Home Sold Guaranteed Realty, has the solution. With our guaranteed 24-hour cash offers, you won't risk owning 2 homes or being homeless. You can buy first and sell later. Are you upgrading or downgrading in the next 3 to 6 months? Text PAIR to 408-740-7400 for a free and no-obligation professional equity appraisal report. For more information, visit TradeMyHome.com or call 408-740-7400. Remember, at TradeMyHome.com, your home is sold guaranteed or we'll buy it. For the next episode of Real Estate IQ, featuring Larry Stone, the distinguished county assessor of Santa Clara and a key figure in Silicon Valley.
Stocks and bonds were rather intangible. You were depending upon somebody else's management and somebody else's success.
His expertise and innovative leadership have profoundly influenced the region's growth.
I found real estate much more tangible. You could manage the property yourself.
Check out our full episode on Tuesdays at 5 o'clock Pacific and 8 o'clock Eastern on YouTube and Apple Podcast.
What are some key tax considerations for international real estate investments?
I would say around 4. Number 1 is the compliance requirements. You want to see, what are the requirements in terms of foreign holdings that you might encounter with the FATCA compliance and the Foreign Corporation Transparency Act. There are requirements to disclose everything and anything that you have in foreign. So that will be the number 1 criteria. Number 2 is you want to see how the gain or loss or how the income is calculated and how the tax is paid on that investment. Mm-hmm. Number 3 is having an exit plan on that property, that how it will be disposed of, how the gain will be reported, And number 4 is the foreign tax credit. What are the credits available for the taxes that you have paid in the foreign country? So I would say these are the 4 key considerations.
And how do you help investors with international taxes?
We usually help the investors with, outlining what are the pros and cons here in U.S. with regards to that investment. We strictly do the U.S. tax analysis that how this investment will be calculating the tax on it, what are the credits that will be available, and then we usually plan around on that too, that how the disposition can be best structured to minimize the taxes here in U.S. and take the best benefit or like maximum advantage of the tax being paid in the foreign country.
What are some forgotten tax deductions for real estate owners?
I would say we have noticed while reviewing several tax returns that real estate investors many times forget depreciation to claim the depreciation because it's complicated to calculate the depreciation, so people kind of try to ignore it. And then they think that, okay, I have not claimed the depreciation, so there would not be any recapture. But that's not true. Anytime you sell the property, it's always depreciation allowed or allowable. So whether you claim it or not, you still have to recapture it. So I would say that the most often missed item is depreciation. Number 2 is also many times we forget that we have people take out home equity loans to buy the real estate.
Right.
And then those 1098s are usually shown into the home address rather than for the rental. But then you're supposed to claim that on Schedule E, not Schedule A. So it's not limited because nowadays the mortgage interest limitations are only $750,000 worth of loan, right? So if you have borrowed more than that, and if you have used that funds to buy the real estate, you should allocate that interest over to your rental income you have to claim it against your rental income. Another most forgotten deduction would be, going back and forth to see the properties, to see, to make any repairs, do any other, meet the tenants, collect the checks. All those travel expenses are deductible.
I see.
And then lastly, I would say that legal and professional fees are also many times ignored, right? You give your CPA a tax return preparation fees, then instead of claiming it on a Schedule A, if you were to claim it on a Schedule E, that you get to deduct it against your rental income. I would say the trick of claiming the legal and professional fees would be to claim it on Schedule E so that you get a full deduction.
Do you have any specific tax advice for home sellers who are holding on to their real estate sales?
We have encountered so many sellers that they want to sell the real estate, but then they're afraid of paying the taxes, right? Because they're into the highest tax bracket. Even let's say they were to pay 20% federal, 3.8% net investment tax, and 12.3% California. That's almost 35%. So they wouldn't want to sell it. They're saying that, okay, 1/3 of my gain or 1/3 of my proceeds are going to go to the taxes. And once they pay the tax and then they pay off the mortgage, they might not have much money to live off. So, and then they would say that, why would I sell and pay the tax on it? But I would say that consider how that transaction fits into your bigger picture. What kind of investment goal it serves? Do you want to diversify if you are holding on to many real estate properties in the same neighborhood or, in the same region? Your risk concentration is higher, then there are ways that we can design a sale where, you would pay the minimum taxes, defer the tax, preserve the same nature of the tax rate, that you would preserve the nature of the gain, whether it's long-term, short-term, and then defer it, sometimes come out tax-free. So there are ways of selling the real estate, setting it up in either a charitable remainder trust, deferred sales trust, or installment sale, where you would defer your taxes significantly and still have quite a bit of upside being retained for you to be utilized.
Thank you so much, Ami, for being part of our show. Keep up the good work and let's stay in touch.
It is my pleasure, Sharad, to be here on the show, and it was a fun having conversation with you.
Thank you for listening to the podcast and acknowledging the wisdom of smart moves in real estate in Silicon Valley. Please share this episode with a friend, subscribe, and leave us a review on Apple Podcasts or wherever you listen to podcasts at Real Estate IQ. Thank you to our sponsor, TradeMyHome.com, for their client commitment and for making this podcast possible. If you're considering buying or selling a home, visit TradeMyHome.com. Until next time, remember to stay ahead in the real estate game.